All right, what is going on, guys? John Fibonacci here, and today we're going to give you another way of smart money concepts, right? Another way of being able to call moves before they happen, right? And I know that sounds crazy, right? But yes, I'm going to show you how to time travel. All right, that's essentially what we're doing here. So you've heard us say it before. Terms like open interest, COT, seasonality, things like that. So this video, we're going to go over seasonality. Okay, I know a lot of you have been waiting for this, and here it is. Okay, so there are multiple sources of where seasonality came from. So let me pull out this tool real quick. This actually, I'll do the text tool because it's more than just this person. So I'm gonna go ahead and write it on the screen. So this book is by Jake Bernstein or Bernstein, however you say it. And I read this book, and it's really, how do I put this? It's not bad, okay, but you have to kind of really focus on it. Okay. It's a little bit dry, but I promise it's amazing stuff. Okay. So this is Jake Bernstein. Now, he quoted two people from this book, which is W.D. Gann and none other than Larry Williams. Okay. So there are the three people that essentially pioneered the seasonality, right? They started it, studied it, piggybacked off each other, whatever you want to call it. Okay, these are those individuals for seasonality. Okay, and if you've ever heard W.D. Gann, if that name is familiar to you, I think he's the same one that designed the Gann box, the Gann fan, and all of that. But you guys know we don't do indicators here, okay? So anyway, yes, these are the people that pioneered seasonality. Okay, so I just want that to be clear, right? We're always going to credit our sources, right? Give credit where credit is due. So there you have it. Now, you guys know always, always we start with definition. Again, we don't make up anything, right? We don't pull names out of a hat and say, yep, that's what it is. No, no, no. These are the real definitions, okay, of what it is. So, what is seasonality? Seasonality is a characteristic of a time series in which the data experiences regular and predictable changes that that recur every calendar year. Okay, any predictable fluctuation or pattern that recurs or repeats over a 1 year period is said to be seasonal. Right now, obviously, it's different from cyclical effects and all this and that. Okay, and again, guys, as always, go to investopedia.com, look up the definition for seasonality, and go read it a little bit more. Okay, you'll get just a slightly better understanding. Okay, so glad we got that. Basically, it's, history repeats itself, right? You guys have heard that before. You're no stranger to that saying. We've all said it, just like in the charts, right? How we understand that the markets are manipulated over and over and over, right? History repeats itself. This is no different. The only difference here is that it's going to be very similar to open interest or COT, where this is not a day trading strategy. Okay, this is I want to catch the next 2 months, 3 months worth of moves, right? I want to catch 1,000 pip trade, a 2,000 pip trade, or whatever have you. This is how you're able to do that. And it's a better timing tool, okay, than anything else. All right. So the example that I always like to give, and if you've seen this before, it is what it is. But um, the best example that I like to give is gold and silver. Okay. So, what I'm going to show you, it's very real. It's not something that I've made up. I'm showing you the charts. Okay. Because as accurate as it's going to be, as insanely as many pips as it produces, you're going to think I'm just making this up, and I'm not. Okay, so we're gonna go slow. Well, at least I think so. We're gonna go slow, and I'm gonna walk you through this. Okay, and this is how I was able to call bottoms on commodities. Okay, and in front of people. Okay, this isn't hindsight. Okay, I was calling it 90 days in advance. Right, you guys remember when I was back with Rock Coomer, right? September, October of 19. I told you the bearish was coming, and I told you the next upswing was coming as well. And it's all in the recordings, guys. But anyway, we're not here for me, right? We're here for you. So let's go ahead and get started. What I like to do, what I tell folks that I believe, this is just the way I do it personally. Nobody ever told me this. Okay. What I like to do is look at the first trading day of every year, okay, which is going to be January 1st or January 2nd. That's what these lines are, okay? Forgive my, unstraight drawing. That's what these lines are. If you can see that, I hope you can. Okay, it's either the first trading day of the year or the last trading day of the previous year. Okay, it's going to be off by a day or two. Who cares? So I like to look backwards and forwards 90 days. Okay, roughly 90 days prior, 90 days afterwards. So, what I'm looking for is the same thing every year, where what I want the last 90 days of the year to drop, and I want the first 90 days of the year to rise. Well, the first 90 is probably like 60. Okay. A more specific date I like to use is February, is a specific day in February. I expect the market to rally from the end of the year into February. Okay, so let's just back test that for a second. And I want you to think about that while we're doing that. Why would I say February? I want you to think about the holidays. What holidays in February? This is a recording, so I'm asking, I'm talking to you like you're gonna answer it. Just think about that, okay? So what do you notice? Okay, in August, what do we get? A drop off into late December. What do you see heading into March, shortly after February, right? What do you notice? It rallies. Okay, so it worked there. It dropped and it rose. Perfect. Let's look at the end of 2014, the beginning of 2015. What do you notice? The market drops, makes a bottom in November, right? And what does it do? Rallies into the new year. Sorry, that line's a little bit off. Rallies into the new year. Okay, so it pretty much worked there as well. Moving forward to the end of 2015, 2016, what do you notice? This was beautiful. Oh my goodness. Okay, October rallies till the end of December, rallies into February. Obviously, it rallies much more than that, but for the sake of just being realistic, maybe we took profits in February. So maybe we missed the rest of this. Okay, the rest of this is not important to the study that of what we're doing. Okay, so we're just focusing on the end of the year and the beginning of the year. Okay, so guess what? It worked back in 2015, 2016. Oh, that's not bad, huh? It's worked 1, 2, 3 years in a row. Pretty cool, huh? Let's continue. End of 2016, beginning of 2017. What do you notice? It should be obvious at this point for those of you who are, really paying attention. Okay, November, December drops off, rallies into February. Wow. Pretty cool, huh? Pretty repetitive, isn't it? Okay. That worked for 2016, 2017. Let's look at the end of 2017, 2018. What do we get? You guys see it. Drop into December, rally into February. Wow. I know some of you are probably like over there giggling right now, just because of of how amazing this is. Let's look at So that was 2017, 2018. It worked very well. Let's look at 2018, 2019. Was the timing a little bit early? Yes, it was. I called this bottom. I wasn't in Trade House at the time, but I was on Facebook and YouTube, and I said, hey, you know what? This is the bottom for gold. Now, there was a monthly level. There was a monthly institutional candlestick. You can backtest that. That was here. So that's why it happened a little bit earlier than normal. Okay. So don't think, oh, John, it didn't set the low in November. Like the strategy sucks. No, no, no. Okay. Smart money works on big time frames. So it happened earlier on 2018 than it did the rest of the years. Okay. This isn't cherry picking. I'm not doing any of that. I'm telling you for what it is. Actually, you know what? Let me just show you because I think some of you are thinking otherwise. Okay, here's that 2018, right? What does that dip into? Here's that down candle. Okay, that's why it happened earlier. Okay, so I just felt like maybe we got to clear that up. Okay, let's go back. Enough getting off the track, John. Okay, so when the data decides to load, okay, here we go. So again, we were a little bit earlier, but what did it do? Rallied into February. Okay, there's the first day of March. It rallied to the end of February. That's perfect. Now, did I catch the whole move? No, I didn't. I caught silver on a retracement back in November and I got rid of it right before the end of the year. So I did catch a very nice move, but not all of it. Okay, I missed out. It is what it is. Okay, so in my opinion, it did work for 2018, 2019 the same way. Okay, moving forward, what did we get very recently? The end of 2019 into 2020. This is why I was saying that. November, December consolidates, right? And what do you remember from the open interest video about this move and this move back here? I'll let you go back and watch that one again. Okay, November heading into February. It does the same thing. So let's go back for a second. I told you guys to think about what holiday was in February. What are all these lines I just made? What are these in the shape of? Well, except this one, obviously. This actually still makes the same shape, but it is what it is. What are all these shapes? It's a V. What's in February? Valentine's Day, right? Oh, John, well, what does Valentine's Day have to do with anything? Well, you tell me. What are we looking at? What are we looking at? Gold and silver, right? Some of you for some of you it hasn't clicked yet. It hasn't clicked. Some of you it has clicked. You got it. Some of you it has maybe it hasn't yet. Okay? I'll go ahead and tell you. And I'm not trying to be stereotypical, okay? So don't judge. All right? Don't judge me. We're not here to do that. Okay? We're just here to learn, right? So I'm going to get stereotypical for a second. What do men buy for their girlfriends or wives or side chicks, right? What do they buy? Other than flowers and chocolate, what are they buying? Jewelry, necklaces, rings, diamonds, all that. Well, what's jewelry made of? Oh, gold and silver, huh? So guess what? The demand for gold and silver goes up in February, does it not? Will you tell me? You see it in the chart. You know what Valentine's Day is. You tell me. I'm not making this up. I didn't create the Valentine's Day uh what's it called? Holiday. I didn't create that. I didn't go back and manipulate all this price action. I'm just showing you the history and how I was able to do that consecutively because it is a reoccurring event. You see it happen last year, the year before that, 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 and the year before that. So that's what, seven times in a row. Maybe it didn't happen in 2013. I don't know what was going on back there. Maybe in 2012 it did. So you're telling me it happened 8 out of 9 years? Okay. Pretty amazing stuff, right? Now again, I know some of you don't look at gold and silver, right? You like to trade, currency, forex, whatever it is. Okay, I got you. But guess what? Seasonality is not a just commodities thing. It's everywhere. Okay, it happens in everything: stocks, futures, commodities, obviously, and even the foreign exchange market. So, how do we know what these seasonal, right? The seasonality, how do we know what that's going to be? Well, you have to have data. So, you can go back and do all this measuring yourself, which I would never do, or you can go over to equityclock.com. Okay, equityclock.com. All right. And they have some free stuff, or you can, pay for an account. I'm not going to tell you to do whatever you want to do. Okay. But I'm giving you the credit, right? Or not you guys, but I'm giving the credit to Equity Clock because that's the info that, that's where we get the data from. So now what exactly is this data? Let me actually go to, what was the one again? Oh yeah, GBP. Sorry. So what I'm going to do is go over to Forex, and because that's the example that I'm going to give you today, the first one I can think of off the top of my head. All right. So this is what that chart looks like. Right. It's a British pound Forex seasonality. All right. So down here, I don't know if you can see that on your screen or not. It's kind of hard to see, but it says time frame 20-year range ending 12/31/19. Okay. So what this is a 20-year average. Okay. So it's not a moving average. It's basically saying what happened in 2019 plotted on the chart. What happened in 2018 plotted on the chart, average it. And then 2017, 16, all the way to the year 2000, or maybe 1999, because this is through 2019. So this is 20 years of data averaged out. All right. Now, what does that mean for us? Well, if we look at the chart month by month, right? Meaning if we're in, what are we in right now? We're in March right now. So we would be looking at the March seasonal, okay, which is going to be, let me annotate. What we would be looking at this month is right in here. So now what is the chart telling us? It's telling us that we make a high probably the first couple days of March. We make a low near the middle of March, and it rallies and makes another high later in March. So for me, what I would be looking for is a short opportunity on GBP, probably the first week of March. Okay, so now you're getting into a little bit more specific. So if I pull up my calendar, the first week of March, according to the year that we're in right now, 2020, we would be looking for March 2nd through the 6th. Okay, so the very first couple days of March, I would be looking for a short on GBP USD. So we're going to get, or I'm not going to get into live charts in this video, but I will show you one really solid example from October. Okay, so that's going to be very important. So let's go ahead and clean this up because I don't want to look at that later because I don't need to. Because it's at the end of the year we'll get into it. All right, we'll get into it again and we'll call it out and catch another big swing hopefully. So GBP, okay. Let us go ahead and look at March really quick before I go back to the old example. Wow, look at that. What do you notice? Well, our seasonal says that the first 2 weeks of March should be very bearish, right? What do we get on GBP here? It made a high March 10th. Okay, so a little bit off. Wasn't the first week. It was maybe the first day of the second week. Okay, not a big deal. But look what happened. It made a high and dropped 1,600 pips from close to close. That's pretty massive. That's pretty impressive if you ask me. Okay. So there's the quick example. All right. Let me actually go back and do what I said I was going to do and show you the example from October. Okay. So let us look at let's go to a regular chart. Okay. So what I'm going to do is look at this for a second. Looking at sorry, October. So October starts here, and November starts right here. So this, let me just mark it up with a box. That might be a little bit easier. Okay, so this orange box is basically showing us the month of October back in 2019. Okay, so you would know, whoops, you would know that according to our seasonal chart, if I can pull this up, the first half, that looks like the first 2 weeks. Okay, guys, I'm eyeballing it. I'm not, you know, trying to get day specific. I'm giving you the general. So the first 2 weeks, it should make a low. Now, once you understand that this potentially is going to happen, because you've got this information a year in advance, right? We know what April's most likely going to do. We know what May is likely going to do in the rest of the months. Okay. This is how you time travel, right? This is how you, who is that? Stewie from Family Guy, right? Get into the time machine. This is what we're doing. This is the same thing. Okay. Anyway, so the first 2 weeks of October should make that low. So when we understand that, we go into price action and have to confirm. We don't just blindly say, hey, you know what? It's October 9th, it's October 10th, buy it. No, 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 no. We have to confirm it in price action. So that's why I switched back over to candlesticks, right? So check this out. Obviously, you already see that, it made a low on the 10th and exploded. You obviously know that. It rallied 800 pips, which is pretty good. But you wouldn't have taken the trade unless you saw something in here that gave you the buy signal. So, what gave you that buy? I'll point it out because we got plenty of more examples and I don't want to run this video forever. I mean, I love you guys, but we got to have a time limit at some point, right? All right, anyway. So, what is right here? There was a low set here, there was a low set right here. And what's right below that? This is equal lows. And from this down to right here is an imbalance. So what does price do? Dips just below equal lows, dips into the imbalance, and takes off. Plus, there was like yields and other stuff, but that's neither here nor there. That's another video. All right. So that's how you were able to catch GBP for the upside. And of course, I didn't catch this, but had I been paying attention, I would have been able to secure this big move uh, simply because of this, just an average chart, but yet it played out. Okay. So I'll show you one more on Australian dollar. And I don't remember when that is, when it was. I think it was October. I don't know. Let's go take a look. So we need to go to our Forex list, then go to the Australian dollar seasonal chart. All right, cool. Uh, you know what? It was actually a 4 hour. I remember this. I remember who called this out too. I think it was I think it was Jenna that had ended up calling it out. So Jenna, if you're watching, there's your credit. Okay. Awesome job from her. So this was middle of October, I think, near the beginning of October. Oh, sorry. That was the trade she called out, but the low was that. Okay, sorry. I confused you a little bit. Let's scroll back for a second. Australian dollar seasonal in October, okay, makes a low the first, I would guess, the first week of October, and then rallies all the way until November. Okay, so that's pretty impressive. All right. So when we go back and we mark up October, right, what happens? It sets the low on the second, right, which aligns. I don't know why I keep going to that tab. I keep doing that. Okay. That aligns right here in October, the first couple of days. The first couple of days was set. So the seasonality was in effect, right? So what does price do? It makes a higher high on the 11th. We haven't placed the trade yet. Maybe we didn't get in yet. We're getting in on the retracement. And this is the trade that Jenna had called out, right? Because it came down into a retracement. But look what it ran into. Okay. It ran into a 4 hour institutional candle. Maybe that's hard to see for some of you, right? That's right there. Oop, that's right there. So look what happens all the way until November, right? Because the seasonal says, hey, we're going to rally to the end, or excuse me, for the rest of October into November. Look what happens. November 1st is right here. It rallied that whole month. So the trade was supposed to be here on the retracement and getting out up here. So if you, I'll just do one quick risk to reward, then I'm going to toss it over to Jordan. If you had taken the long position at the institutional candle with the stop at the bottom and you targeted just the end of November or October, okay, and just happened to take profit there because of the time, that would have given you a potential risk to reward of 1 to 20, right? 20. So that's a 20% gain on 1% risk or 40% gain on 2% risk. That's pretty phenomenal given that it was only, what is that, 2 weeks, maybe 2.5 weeks at most. That's pretty impressive, guys, if you ask me.